Hey, what's up, guys? Jimmy Jackson, Realtor, Grand Rapids, Michigan, Keller Williams, GR North, Team Takens. So I'm making a video really quick. I'm going to show you guys the top tax deductions for real estate investors if you're looking to invest properties. And if you have any questions, I'm just making this video for you guys really quick. So did you guys know that investors get access to some of the biggest tax deductions that are available right now? And basically, today I'm going to break down what forms you'll use and even show you some examples with some properties that, if I were to purchase myself, I'm going to give you some definitions. Like, for example, you have mortgage interest, which basically is if you were to deduct the interest paid on your rental property or your loan property taxes, to deduct the state and the local property tax. Also, let me see. I'm also going to, let me look at these. Okay, I see the forms that I got. Let me check the forms. All right, I got to make sure I got the right forms. The depreciation. So depreciation spread out over 27 and a half years. So the cost of the building for residential, uh, repair and maintenance, the fixes, painting, patching, lawn care, the repairs and the maintenance, the operating and expenses, utilities, insurance, properties, maintenance fees, travel and mileage, driving back and forth from your rental, track your mileage if you're going to Lansing, Flint, Saginaw, wherever you're going, track that mileage. Legal professional fees, attorneys, accountants, property managers, whoever that you're paying, home office if you manage it from your own home, advertising and marketing, listing fees, your signs that you pay for, billboards, even this software. This is advertising, so I'm paying for this. Education and training, your courses, seminars, books, anything related to any type of education. And then the forms I'm going to be going over is the Schedule E, the Form 1040. That's to report your rental property income and expenses. The Form 4562, that's the deduction and the amortization. The Form 4797, that's report sale of your rental property. And the Form 8892, that's if you're using home office deduction, if you are doing it from your home. Another thing I'm going to show you is QuickBooks. That's if you're using that for your best overall bookkeeping. Stessa, it's free software built specifically for real estate investors. It says free. I'm sure it ain't free, just like every phone app. TurboTax, our H&R Block. It's for filing with integrated rental property sections. And Buildium. It's an app portfolio for property managers with multiple units. So let's jump into an example. So let's jump into an example of a property with a purchase price of $200,000. So what I'm going to do is I'm going to add the property. I'm going to add the form up here really quick. So this is your Schedule E 1099 form. Let me see if I can zoom in on this. Last time I had a little problem with hearing me when I took myself off the video. Give me 1 second. Okay. Well, I hope that you can see this, because last time I was doing this, I had a little problem with the mic when I took myself out of the photo. So I'm going to go over it real quick, then I'm going to take myself off and then scroll through it. Let me take these Okay, anyways. So this is your supplemental income, and I'm kind of, let me see if I can. Give me 1 second. Hmm. All right. I just hope you guys can see this. That's what's making me a little nervous. I'm trying to see if I can. I don't, yeah. Um, anyways, okay. So, like it says right here at the top, supplemental income and loss. This is where you report your income. If you see where the mouse is, um, it's from your rental real estate royalties, partnerships, S corp, estate, trust, and REMIC. So you attach a form 1040. 1040s are like these. It looks like an envelope, kind of. It's a tax form. Um, I'm not. I can't give any legal advice. I'm not a tax specialist, but you'll see it. Look it up online. It's its own form that like contractors will use in a sense. You have to fill that out. There's different 1040s and then attach them. There's even a 1041, and then you fill them out with it. If you scroll through this, did you make any payments? Yes. Physical address of the property. Fill all of this out. The advertising. Let's see. And this is where you put your expenses. Your advertising, your auto and care. Let me let me try one more thing. Your advertising, your auto and travel. Just like I was talking about earlier. You want to scroll down and see the instructions on that. Your insurance, your legal and your professional. That's your attorneys, that's your management fees, that's your mortgage interest, that's your repairs, your supplement, your taxes, your utilities, your depreciation expenses. You want to look that up, and your total expenses, 5 through 19. 5 through 19. You want to add that up. You want to subtract line 20 from line 3, and you want to look for your royalties, see instructions to find out if you must file 1060 form 6198. I advise looking that up. I'm just giving you the basics on this. And this is a bit odd. So slide 2. Man, I really hope you guys can see this. All right, yeah. Let me see if I can make this bigger. Okay, I hope you guys can see this. Income from lost partnership or an S corp. If you're an S corp, that's separate. You're not an LLC. You're not a partnership. You're an S corp. You're something separate. You file your taxes separate. Most people are not going to be an S corp, so I'm not really going to explain this. Just look it up and see what it is. Are you reporting any loss not allowed in the prior year? Your passive income and loss, your non-passive income and loss, your income or form from estimates and trust, passive income and loss, part 3, and then your summary. So that's the basics. If you have any questions, you can pretty much just look everything up online. It's really not hard. We have AI these days. With AI, you can just look it up if you really have any questions. So we're gonna get rid of this form. That's really where you start. That's the 1099. Um, let's see. Yes. Okay. That was the Schedule E 1099 form. So that's like the beginning. That's like the first one. Ah, yeah. Okay. Anyways, so I wanted to throw this on here because this is what I'm pretending. So if we had a purchase price of 200,000, that the rent was 24,000, and it was 1,000 times 2 units times 12 months, that's your annual rent. You'd be bringing in 25,000. So for all those numbers, you remember line 3 to 19, you would put in your mortgage interest 7,500, your property taxes 2,800, your insurance 1,200, repairs 2,000, property management 2,400, depreciation 72, 72, 72, 72. Yeah, and then your total deductible expenses would be 23,000. So taxable rental income is 24,000. Subtract 23,172 is $828. That's definitely a deal. So yes, let's remove this. So like these are the numbers that we're playing around with. All right, let's do form 4262, depreciation and amortization. Man, if you can't see these words, I'm sorry. Last time it was not this tiny. So I have to figure this out, how to get these forms to zoom in more. That's driving me crazy. Anyways, appreciation and amortization, that's included information on listed properties. So let me scroll over here. Once again, this is form 4562. So this is the form you fill out after that. So it's kind of step by step on which forms to do. So the depreciation and amortization are both, oh, sorry. Let me scroll down a little bit. Kind of just went through all of that. So the depreciation and the amortization is pretty much both tax tools that let the investors spread costs out over time instead of deducting everything at once. That's another positive. They are non-cash deductibles that reduce the taxable income. Just remember that depreciation, it allows real estate investors to deduct the cost of a property over a set number of years, even though the property may increase in value. That's definitely beneficial. So residential, 27 and a half years, commercial, 39 years. Commercial, you're in a longer agreement generally. You depreciate the building, not the land. Remember, if you're getting into a commercial, everything's different. Usually even closing a commercial deal is longer. It's a longer process. Buying it as an investor, you want to look at the NOI, the net operating income, to see if you're going to make any money. So we already went over. So like if the purchase price 200,000, the land value is 40,000, the building value is 160,000. That's the number that you would use. So 160,000 divided by 27.5, 5,818 would be your yearly depreciation. That's where you come up with the depreciation number. That's what you would report on that calculated from form 4562, and that's what was reported on. That's what you would report onto Schedule E. Your amortization, that's your loans and your intangible costs. Let's see, that's gradually deducted or repayment of costs over time. That's usually related to your loan balance, your loan related fees, certain startup and closing costs. Let's see, we can skip through this a little bit. You'll just always remember that your loan amortization is your principal and your interest. Make sure you always remember that. Your interest is usually getting paid at first in like the first 5 years, maybe longer, and a little bit is going to your principal. and then gradually it flip flops where it's going more is going to your a higher percentage going to your principal, and then a higher percentage is going to your and lower interest, a lower percentage is going to your interest over time. So just keep that in mind. Let's see. I can skip over this a little bit. Depreciation may be recaptured when you sell. This is why planning with the CPA matters. Certified public accountant. Make sure you keep in touch. Once you get to that level, and when you can, what you're paying your CPA. Remember that can be without in a tax write-off. So that's something important too. So, and all that goes onto this form right here. So I won't even go through it all. It's a lot. If you sit down, take your time, you can figure all this stuff out. We have AI these days. You can just take a photo and you will know exactly what you're doing. Just take a photo, man. You can figure it all out. So, all right, let's jump to the next one. Now I'm just going to show you, let's see, form 4797. This is the sale of your business property. Let's jump in here. I gotta find really quick where I put that. Let's see. All right, let's see. So this form is used to report the sale, exchange, or disposal of business or rental property. So you use this when you sell a rental property, a business property, or dispose of or convert a rental to personal use. So if you turn it from a rental to your home, you also have to use this form. This one matters. It's a big one. You have to use it for your capital gain because you're selling. It separates your profit, into your capital gain. These are taxes. These are taxed differently. Your depreciation recapture is captured differently. Your original purchase price, what you paid for it, you have to make sure that you keep track of that. Your accumulated depreciation, like we talked about before, your sale price, what you sold the property for, minus the selling cost. Let's see, your depreciation recapture, the portion of the gain equal to depreciation taken, tax up to 25%, and reported on this form. So let me see. So like, for example, if the IRS is saying like you got tax breaks while you own the rental and you sell it, you want some of that money back. The IRS recaptures that depreciation that you claimed. So that depreciation is being recaptured. It's being taken back. The IRS does it because you reduce your taxable income every year using depreciation. The money you saved on taxes, when you sell, the IRS taxes that portion separately. So here's an example. You purchase it for $200,000. Depreciation is taken. That the amount of the depreciation that's been taken is $50,000. You sell it for $300,000. Total gain, $100,000. The first $50,000, there's the depreciation taken. That's what is recaptured on Form 4797. The remaining $50,000 is the capital gain. Man, they take your money. Form 57 fits in the tax flow. Schedule E, That's where you report your rental income. Schedule 4562, that calculates your depreciation that we already talked about. And form 4797, that's used when you resell. So that's your capital gains summary that goes on Schedule D. So a little confusing, but that's why you have tax specialists. Once again, you have AI. AI can teach you all of this stuff. So I'm going to just scroll through it real quick. So sale of business, also involuntary conversion of recapture amounts under Section 179. So it's just an involuntary conversion of your recapture amount. So once you understand what recapture amounts is, this will all make sense. So you have to enter the gross proceeds from sales or exchanges reported to you from 2024 on Form 1099B or 1099S for successful statement or substitute statement that you are including on line 2, 10, or 20 for instructions. So you need to use the other form to report that onto this form. Enter the amount of gain that you are including in line 2, 10, and 24 to the partial disposition of MACRS assets. Enter the amount of loss that you are including on line 2 and 10 due to the partial disposition. Sales or exchanges of property used in a trade of business and an involuntary conversion from other than casualty or theft. Most you got to be kidding. Hello? Okay. I don't know why my audio just went out, but sorry, I think my audio just went out for a second. Well, yeah, that's this form. So we'll remove this. Let's remove this. I can just remove from the studio. And yes. Okay. Yeah, and that last form, I'm not going to pull it up. This video is going a little long. So the last form is just to, if you are working from home, you can look it up. It's not really a very complicated. You just have to file all your taxes. These are all the same concept of forms. So you're just filing your taxes saying you work from home and you're keeping track of everything that you're spending for, how much you pay. It's probably going to ask you for the size of where you're at, your marketing, um, probably the cost, probably what you spend on. It's probably going to ask you your mileage. It's probably going to ask you a ton of stuff, but I bet you it's not as complicated as the last two tax forms we just went over. I'll tell you that right now. It's definitely probably not going to be as complicated as the 4797 or the 4562. I'm pretty sure it's not going to be as complicated as those. So, but if you made it to the end of this video, thank you for watching. Merry Christmas. Today is December 17th. So Merry Christmas, drive safe, and have a blessed evening. Thank you very much.